Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equities may get off to a lackluster start on Friday. SGX Nifty, after giving up all the early gains early this morning, has hinted at a negative start coming in for Indian equities. While US markets, they were somewhat lackluster on Thursday night, down by Disney shares and PacWest. That's the bank which sparked the worries coming in for the regional banks. The bank plunged, PacWest Bancorp plunged 25% after it reported a drop in deposit and sparked another fears of rout coming in the regional banking sector. Asian shares at this point of time have been subdued after softer economic data on US and China. Talk about FIIs, the trend continues there for 11th consecutive session. FIIs have bought shares worth around 837 odd crore, and DIIs, they've snapped two-day buying streak out there and sold shares to a minuscule amount of around 200 crore on May 11th. Tata Motors, Cipla, Vedanta, Colgate, DLF, Hindustan Petroleum, APL, Apollo Tubes, Polycab, Sri Renuka Sugars. These are going to be some of the companies which will be reporting in their numbers on May 12th. But let us get going and discuss some stock and strategies with Hemen Kapadia, Senior Vice President, Institutional Equities, Choksey Securities out there. Good morning there.
A very good morning to you, Nickey.
All right, it's a weekend mood clearly which is setting in, but looks like markets have hit a pause or probably will get on to a lackluster start following the global setup that we're seeing mixed cues coming in. Breather which came in on Nifty. Man, what are you picking up and what's the strategy that you will suggest this morning?
Well, in terms of Nifty, I'd say stay away for the time being. We've had a phenomenal run up. We've taken a breather. Okay, the Bank Nifty has led the entire move. The Bank Nifty has stagnated. Nikkei, if you look at the Bank Nifty charts, 1, 2, 3, 4, 5, 6, 7, 8, almost 9 trading sessions and counting. Today is the 10th. We've gone nowhere. I mean, that's normal to expect because after such a humongous run, we are going to consolidate to a little bit of a time price retracement. So that's what we are undergoing. It's going to take a few trading sessions more, I believe. So I'm not sure if I have a trade as far as the Nifty, Bank Nifty is concerned. We'll open gap down. So even if you were to short, I'm not sure if it's a good idea to chase a gap down opening. But yes, stay away. Or the safest way is we have the range as far as the Bank Nifty is concerned, let's say around 43,600. I guess it's 43,700. So one can sell the 43,800 calls and maybe the 42,400 puts. You can do a strangle sort of a thing where you sell slightly out of the money calls and puts and wait for it to pan out because I don't think we're going anywhere. A slight negative bias will be seen though.
All right, so that's the call coming in on the derivative segment as well as the whole consolidation trend which has been playing up, at least when it comes to the Bank Nifty out there. A strategy given by Hemen, but something which is bright this morning, Hemen, we've spoken enough about the lackluster opening. It's a weekend mood. Give two profitable stock ideas there for the viewers. They can have some good money out there. Book the profits off the table.
Sure, Nickey. Why not? And why two? I think I can give you three also if you permit.
Sure. Please.
Okay, a couple of stocks, Nickey. First is a buy call on Ambuja Cement. We are moving in an ascending triangle and we've broken out from an ascending triangle. The mechanical indicators have given a crossover buy, higher tops, higher bottoms, above the 55-day exponential moving average. So Ambuja Cement has broken out. One can buy Ambuja Cement at 410, stop loss 398, target 434. It's a positional call. Second is a slightly contra buy call on IPCA. Deeply oversold, has fallen off a cliff, stability on intraday charts, positive divergence is coming in, base formation in place. One can buy IPCA at 700, stop loss 688, target 724. Lastly, a buy call on Tata Power. Hasn't done much, promises a lot, great from a longer term point of view. Higher tops, higher bottoms. The weekly setup has improved. So one can buy Tata Power at 205, stop loss 199, target 217.
All right, so that's the three calls coming in, IPCA, Tata Power and Ambuja. These are the three ones that we have. Hemen, I'm going to address in Eicher Motors numbers. Do you want to give a technical view on that one? It's not far away from the 52-week high level, is it?
No, it's not. thing is, we've moved up for almost 7 weeks in a row, so to speak, Nicky. So the setup is fine. There is absolutely no doubt on that. Auto Pack has been doing well, and 3,500 intermediate resistance. If we close above that today, it's a weekly chart. So setup is good. I'm not sure I would want to chase the gap up opening though, Nicky.
All right, not chasing the gap up opening, but better mix, commodity tailwinds, and strong growth. That's the story playing out for Eicher Motors. If I'm just supposed to sum up the Q4 earnings out there, but let's address top movers of the day in bunch of stocks that we're going to be addressing. And of course, like we discussed, Eicher Motors, HAL, Kotak Mahindra Bank, Tata Motors. These are going to be some of the counters that we'll be talking about. But basic numbers first for Eicher Motors, at least on the face of it. We've already summed it up for you in terms of the better mix, the commodity tailwinds, strong growth coming in for a particular VECE segment. But the numbers out there, revenue up by 19%. The number that was reported was to an extent of 3,800 odd crore, and what was estimated was 3,740 crore. EBITDA, that came in higher by 23%. The number came in at around 933 odd crore for this one. Street was working with an estimate of around number of 896 odd crore. Margins, they too expanded 24.5% as compared to 23.7%, and profitability of the company, that has also increased by 48% to a number of 905 odd crore as compared to the estimate of a number of 785 crore. So seeing that beat coming in on the operational performance as well as on the bottom line performance, it's overall good set of numbers. But what I'd like to talk about extensively is the MSCI announcing the May 2023 Rejig for India Standard Index. That is one which is an interesting one. We did speak about it yesterday also, where I highlighted about Kotak Mahindra Bank and HAL. But today I'm just going to give it a little more detail out there because the announcement has finally come through. It's added Max Healthcare, HAL, like we indicated, and Sony BLW Precision to the index. This could now result into an inflow of $295 million for Max Healthcare, $195 million for HAL, and $175 million for Sony BLW. Now that is as per the Nuvama research that we're giving out these numbers. What goes out or what gets deleted is Adani Transmission, Adani Total Gas. These are two Adani group of companies, and Indus Towers out there. These are three counters which will go out of MSCI India Standard Index, and this would result into outflows to a tune of around $201 million for Adani Transmission, $186 million for Adani Total Gas, and Indus Towers will see an outflow to an extent of around $84 million as per the Nuvama research out there. In terms of MSCI announcement to the new addition to the list, they include, some of the stocks include Scafin Technologies, Bikaji Foods out there, Fusion Microfinance, and SGS Technology, Religare Enterprises. Do remember the fact that Religare Enterprises also come up with good set of numbers out there. NMDC Steel is also expected to be added out there. It's announced to be added. Ujjivan Small Finance Bank are some of the other companies out there. Of course, MSCI announced the biggest weight increase in Kotak Mahindra Bank, which would need to an inflow of 810 million. South Indian Bank out there, lower principal repayments has led to a strong growth coming in for Q4, and the bank has recorded the highest ever NIM profile at 3.67. So that's the word coming in on account of some of the bunch of the stocks that we're going to be talking about. Asian Paints, we're going to be addressing that in just in a jiffy, but it's outperformed the other regional, or rather the peer set out there. Let's address the market opening. Okay, it's not really a great start like we indicated. It's going to be a lackluster start coming in for the markets, and it's playing according to the book out there. Nifty 50, we're seeing losses to an extent of around 0.25% coming in for that index. Talk about the Bank Nifty index out for you. Bank Nifty index, we're seeing that selling pressure. Like Hemen was pointing out, it's seeing Bank Nifty typically not going anywhere and being stuck in a very tight range. Today also it's down and out with some amount of slender losses to an extent of around 0.1% out there. And in terms of the small cap and in terms of the mid cap index, just to see if they have managed to hold on to the green? No, but that's also we're seeing that mid-cap index are coming to selling pressure right now with losses of around 0.1% out there. Talk about the small cap index. Well, pretty much flattish out there with negative bias, somewhat outperforming the peers, but still the trend remains negative. The negative undertone continues to play out on Friday. Auto index is shining right for you. Eicher Motors, like we indicated, well, good set of numbers out there. Gains of close to more than 0.75% out there in terms of other sectoral indices that we have on the list right now. Pharma index is down and out with losses of around close to 0.5% out there. And if we talk about something like realty, IT, FMCG for that matter, FMCG too is taking it down at this point of time. It's reeling a little bit under pressure with losses of around 0.1%. IT, the knock is hard for this one as compared to the other defensive sides out there. Losses to an extent of more than 0.25%, and Nifty Realty. So that's the one which is holding up in green with gains of around 0.1%. So the trend is pretty clear, right? Rate sensitives relatively continue to do better as compared to the defensive packs. Metal right now has been shining, not really, sorry, it's down and out, and it's taken a hard knock with losses of more than 1% out there. So it's clearly one of the top losers that we have on our list right now. Talk about the consumption story, that is also down. Advances and declines at this point of time, well, pretty much skewed in nature, You've seen 15 advances and the market read totally now favoring in the favor of declines to an extent to 35 declines versus 15 advances. So that's the trend playing out. Nifty level at this point of time has sunk below that 18,250 mark, or let's just say it's flirting around that 250 mark. 18,300 mark has clearly been taken out there. And also, let's address the top gainers and the top losers that we have on our list thus far. Eicher Motors is shining in green for you. Tata Motors is going to be reporting in the numbers. Hero MotoCorp, that's another one. So clearly the entire auto pack is up in green for you. Bajaj Auto, Cipla, ONGC. These are some of the top gainers that we have on our list right now. Some of the defensive names have also made it to the next. Britannia is shining in green right now. It's seen that EPS upgrade, right? Maruti Suzuki and M&M. You can just take the auto index and just put it out on the top gainers list, and you have the top gainers ready for Nifty 50 index right now. Talk about the top losers out there. DV's Lab, JSW Steel, Hindalco, along with some of the other names that we have on our list thus far. BPCL, Tata Steel and L&T. These are some of the top losers. So metal pack at the losing side, auto pack at the gaining side. But let's also address in what we have in terms of stocks and news, just to see how the trend has been playing out. Something in the like of Asian Paints. I'm going to be addressing that next. We're going to be talking about how Macquarie has given an outperformance rating coming in for this one. So that's the one that we need to keep an eye out on. Well, it's not really holding up at this point of time. It's seeing losses to an extent of close to 1%. Something in the like of Kotak Mahindra Bank, HAL also needs to be pulled up because MSCI has announced that India indexed Rejig out there, and on account of that we're expecting some amount of reaction coming in on these names. One of the biggest Kotak Mahindra Bank is seeing those gains coming in to an extent of around 0.5%. So that's the inflow which is going to be biggest for Kotak Mahindra Bank. HAL, well, it's expected to see an inflow, but probably much of it has already been factored into the stock prices right now. So Eicher Motors typically was doing well. So this is overall the trend that we are looking at in terms of what, the view is coming for Asian Paints. Now what JP Morgan has to say, it's maintained the neutral rating and has revised upward the target price to an extent of 3,100 rupees for Asian Paints now. Margin-led Q4 earning beat, and the revenue growth is key for the stock performance out there. Despite higher margin in Q4, the operation, the profitability has maintained, and the guidance, also of 18 to 20%. It anticipates competitive pricing, brand spends, and investment in new categories to kind of weigh down on that profile per se when it comes to the Asian Paints numbers out there. So that's clearly one of the counter that we keep an eye out. Management has also called out the way they're going to be aggressively pursuing the growth out there. So the competitiveness has clearly been reflected in the commentary out there. 4Q numbers have positively somewhat surprised us. This was the view coming for Morgan Stanley. They have management has retained that 18-20% of EBITDA margin guidance and says that the company may consider taking price cuts if needed. So that's probably the commentary out there, although a bit aggressive in nature. Now you can see the focus shifting from the pricing scenario to the volume growth picture. So that's probably weighing down on the performance of Asian Paints out there early this morning. Also, in bunch of other stocks that we're going to be talking about will include the likes of Religare Enterprises, net profit of 3,481 crore as compared to loss figure in the corresponding quarter. Revenue is up by 46%. Operational performance has been super splendid, 92% growth out there. Stock isn't reacting too much, but is up with gains of close to 1% out there. Zenza Technologies, if we can talk about that a little bit and the earnings, how these have stacked up for you. Well, we're seeing gains coming to an extent of 6.5% for this one. Net profitability up by 55.8%. Sequentially good set of numbers if you look at it. Revenue, well, flat, but up with 1.3% out there. EBIT is where we're seeing the amount of surprise creeping in from. EBIT is up by 65% at a number of 140 crore as compared to 85 crore in the corresponding quarter. The margins have come in at 11.6% versus 7.1% sequentially. So that's a huge amount of expansion when it comes to the margin profile in terms of estimates. All of these numbers. Hemen, comment on this one. What do you make out of something like an Asian Paints at this point of time? And also Auto Pack entirely is, up in green. Entire Nifty top gainers are just, they're featured into the list of Nifty top gainers. Within the basket, what do you like?
Well, Asian Paints give a breakout from a range between 27 and 29.30. Okay, that's history now. We should be gravitating towards 3150. That's the first headache in terms of resistance, and then 3300. I think, like you hit the nail on the head, Nicky, the entire auto pack is on fire. From a longer term point of view, I guess a very clear pick would be Bajaj Auto. But Bajaj Auto has gone up almost 20% and more from here. Even Tata Motors is something which looks extremely positive from a longer term point of view. Almost 1.5 years of consolidation and now setting the stage for the breakout. So frankly speaking, a toss up between Bajaj Auto and Tata Motors, maybe Tata Motors has the edge. Nicky.
Okay, so Tata Motors is the one which is going to be coming up with numbers today. Do keep an eye out on this one. Eicher Motors splendid set of numbers. But Auto Pack in general has been really good, in terms of the way it's reported. It's better than estimates out there for the entire March quarter. Hemen, I'm going to leave it at that. Thank you so much for taking all the time and speaking to us this morning, please. All right, let's address the fundamental story of the day out there. We're going to be joined in by Mayuresh Joshi, the head of research for William O'Neill Company out there. Mayuresh, good morning.
Morning, Nicky. Pleasure to be on air.
The pleasure is all mine, but I'm going to start off by asking you about your assessment on the auto pack. Eicher Motors has done well. We are seeing EPS upgrade coming in for the auto names. You think there is more steam to the rally? What's your assessment and how do the valuations stack up for you?
So to a large extent, I think if you look at the numbers delivery for the pack as a whole, I think the numbers delivery has been very, very good. You look at the two-wheelers, Bajaj Auto gave a good set of numbers and the commentary was equally good as well. Post June, July, they also expect the exports market to start picking up, which is a significant portion of their entire revenue pie. TVS Motors, again, the margin performance was exceptional. They've been doing this for the past few quarters. The foray of all these players into the EV market, and again, key launches expected in the next few months and quarters, that should probably hold the earnings trajectory up for these players as well. Because a large part of the capex has got gestated onto the balance sheet. And as more capex starts getting accounted for, as numbers start streaming in, you'll probably see leverage play out. Even within the four-wheelers, I think Maruti gave a reasonable set of numbers. You have Tata Motors numbers today. The expectations that the volumes will be reasonable is well known to the markets. But I think the UK operations, specifically JLR operations, are turning around to a large extent. And the impairment hits that taken a few quarters back are seemingly behind us at this point of time, as far as balance sheet concerns are probably to be seen. Even the commercial vehicle players have done reasonably well. Expectations in terms of both the MHCV market holding up, with infrastructure spending, the LCV part of the market, including the tipper market, should hold up for these players as well. As input costs, Nicky, come down for the sector as a whole, with semiconductor issues behind us, the OEM demand probably remaining intact, at least at this point of time, with the interest rate curve largely expected to be behind us as well, and the replacement market holding up. I think the OEMs on the auto space are holding up, and so are the ancillary players as well. You look at the tire companies, a very good set of numbers. Input costs have gone down significantly, which means margin expansion, which what witnessed in this quarter should probably be seen. If you see some element of price cuts, that should aid volume growth even further going forward. But the replacement market, again, holds out for these guys. Battery makers did well, and a few of the EV players as well were supporting the entire EV ecosystem. These ancillaries also probably did well. So yeah, auto as a space and ancillaries probably remain in a very sweet spot.
All right, so that's the word coming in. Mayuresh, Tata Motors will be coming up with numbers today. Do you think it's going to be better than most of the peers out there? What's your assessment, and how do you expect the numbers to stack up for the day?
So volumes are known, as I said, Nicky. I think for auto players, volumes is the known fact. I think it's only the operating part which becomes of paramount importance. Now, the Indian operations should hold up pretty well. As I said, the MHCV part should hold up well. The domestic PV segment should hold up pretty well as well. And therefore, I think the Indian operations should not be of a concern for Tata Motors. For JLR in particular, what you've probably seen over the last few quarters, the volumes is something to be looked at, specifically from a forward guidance perspective, in terms of a soft recession that is expected, both in America, both in Europe, as well as the soft uptick that you're probably seeing in China, which probably becomes one of the biggest markets. The first half can be a little bit soft for JLR, but a large element of the costs that have got embedded in terms of both the EV part of the business for JLR, in terms of R&D, in terms of expenditure towards the EV modules and platforms. I think a large part of that has been gestated on the balance sheet, and therefore I think the cash impairment that I was just speaking about in the opening remarks should be largely behind us. So I think it's all about management commentary. My own sense is that first half can be relatively softer for JLR, assuming global macros, but you should see a strong recovery coming back in Q2 or H2 of this financial year. So I think commentary is something that will do the trick for Tata Motors.
All right, so we can expect the Indian operations to do well. JLR is the business unit that continues to be seen out there. We're going to be talking about overall the metal profile out there, the commodity. How has that stacked up for you overall? Something like Hindalco has been down and out after Novelis reported numbers out there. If you talk about, the other entire metal pack is down and out. It's probably the profile, the margin profile hasn't been too well, though we are seeing that easing cost inflationary pressures out there. What do you think is weighing down in the entire metal basket? Is it a valuation, or is it the lack of interest given the performance in the previous 3 quarters of these companies?
I think valuations is no longer a concern, Nicky, for the metal pack. I think it's more in terms of the expectations of demand recovery. I think a large part of the expectations was possibly weighing in on China a couple of months back with the China unlock and the reopening trade. But the China unlock and reopening trade has really been soft. The construction activity still remains subdued in China. And so does the auto stroke ancillary activity. And therefore, I think the entire impetus that was getting expected of a huge rebound in Chinese economic activity, along with the huge stimulus that is getting that might probably get announced. I think both of them dashed hopes for metal counters in general. What really happens is China is one of the biggest producers, consumers, and re-exporters in terms of processed steel and the non-ferrous metals as well. And China probably accounts in terms of how the LME pricing will probably go about. And therefore, I think with a weak China reopening, a soft landing in the US, softness in Europe as well, I think the LME prices still remain extremely subdued. Domestic demand, no two ways about it, is extremely strong. Even if you look at Tata Steel's numbers, which were domestic operations did phenomenally well. And my own sense is with government spending, infra spending, private capex picking up, domestic spending should hold up the space again for metal counters as a whole. But generally, I think because LME prices remain subdued, even if you have a reasonable amount of volume growth, you clearly don't get that operating leverage with higher prices. And as input costs have started coming down, you expect a fair deal of price cuts to probably come through to further support the volume growth going forward. But clearly, unless LME prices show significant recovery, the pure operating leverage or a significant earnings outweigh probably remains a little bit on the lower side. Having said that, Novelis's numbers yesterday, reasonable, expecting $500 in terms of EBITDA per ton in the second half. So the first half, again, is expected to be soft for all these conditions put together. And therefore, in my opinion, I think a lot of metal counters in the next 2 quarters will brace in for the worst in terms of all these factors. They will bottom out. As I've always mentioned, there will be better opportunities in this spaces. When the pessimism is at its peak, which should happen in the next couple of quarters, I think that is the time when proper cases if formed on metal companies or counters with proper stage breakouts can probably be looked at. But I think the next quarter or two will give you opportunities in this space. Non-ferrous is something that I'll be interested on because that is one space where specifically aluminum companies, where I think a huge amount of demand expected both from the EV space and ferrous, again, a couple of quarters down the line, I think their time will come at that point.
Right, so that's the word coming in. I was a bit surprised when you said non-ferrous because much of it is linked to LME and we aren't seeing any amount of global cues coming in for that one. So that's clearly the word coming in on that one. But I'm going to quickly chat about the Z-Sony merger, which could face another big test out there. A SEBI interim order could pose a hurdle in the merger talks between Z and Sony, as one of the SL Group companies is under the scanner for alleged diversion of funds out there. So seeing Z not doing too well, yet another stock is down and out with losses of around 5% out there. Your assessment overall on this one?
No, so I think it's too much of a news flow, Nickey, over the last few months. You just came out of one news flow, which was probably expected to be that most of the headwinds are over, and you get one round of news flow again related to these counters as well. Obviously, I think the synergies that one expected before this news flow is a significant one. But with this news flow, again, I think there is a lot of apprehension that comes in, a lot of headwinds, whether the merger will come through, whether approvals will come through, what happens next. And therefore, there are far better counters in the broader market to probably look at. Let the news get completely gestated by the market. Let there be no headwinds left. And even after the headwinds and clarifications, if the stock has moved up, I think it at least removed that iota of doubt that anything that is acting as a baggage to these counters no longer exists. I mean, I'll be better off looking at other broader market count.
So you're clearly not going with the development which says buy on news and sell on rally. So it's not a news that we like to track out to, at least when it comes to Z Enterprises out there. The stock has been behaving rather volatile. But Mayuresh, thank you so much for taking out the time and speaking to us and giving those views. It was indeed a pleasure chatting with you.
Thank you so much. The pleasure was all mine. Thank you.
Right, with this, it's a wrap and goodbye from the entire team who puts this piece together overall for you. And thank you so much for watching, guys. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.